I hope you've been following my videos on the retirement crisis. We first went into the demographics, which basically said that the market was going to go into a downturn because the boomers were retiring, they were going to be liquidating their assets, and as they did, that would create more sellers than buyers, and we'd see a downturn in the market. I then did a video about the pension funds who are extremely underfunded, chasing any form of return that they could get to bring their books into order so that they could pay the pensions that they're obligated to pay and avoid a crisis there. And this has pushed them into what are some very precarious positions for pension funds. Then I did a video about the rising national debt and how, in fact, our debt increased from 8 trillion to 18 trillion in 10 years, from '08 to 18. And we thought that was pretty astronomical, but that was nothing compared to what has happened in just the last year. We added another 4 trillion, and we're now presenting a budget deficit of another 1.5 trillion. So there is no control whatsoever coming from our government. They basically believe they can just keep printing money and push the market higher and higher, and there is no day of reckoning. And that's where I believe that the problem really lies, is the Treasury's willingness to continue quantitative easing through the printing of money. The money supply has grown astronomically. Corporations' debt is higher than it has ever been. It has increased by 50% since 2008. And this is totally irresponsible, according to most people. Yet our president just met last month, suggested that it would be nice for him if the Fed would reduce the interest rates on treasuries down to a negative percentage. This would then make money even more attractive. It would make corporations more interested in buying back their shares at a discount, and as they bought them, pushing the hot prices higher ever more and driving the stock market continually higher. And they're doing this as if there is no day of reckoning. So I did a video where I mentioned that Jeff Bezos had pulled out $4 billion sold $4 billion worth of Amazon stock, and his wife McKinsey had sold 400 million. I thought those were sizable numbers. Then I came across an article said that Berkshire Hathaway had $128 billion, 24% of the market cap of Berkshire Hathaway in cash, and that's $128 billion. So I did a little bit more research, and I want to share with you what Charlie Munger, Berkshire Hathaway, if you don't know, is run by Warren Buffett and Charlie Munger. And so here's what Charlie had to say.
Interest rates down to zero, and all the countries print money like crazy. It's lifted the asset boat for everybody. And I think it really is. So they didn't have anything else to do in the Great Recession. And so they took the only weapon they had and used it aggressively. I don't think we should quarrel with that. It did cause the people who were already rich to get richer. But that wasn't done on purpose or anything like that. And I think that will correct automatically.
Do you think we should still be using that weapon aggressively, which is what President Trump would like to see happen? He wants them to cut interest rates again, I think he said by 1%, and also push up quantitative easing once again. I
am so afraid of a democracy getting the idea that you can just print money to solve all problems. And eventually I know that will fail. Singapore, which has a marvelous economy, has zero debt. If I were running the world, I would like the United States to be in that position. That is not the typical. That's nobody's position. all these politicians in Europe and America have learned to print money.
And if we keep at these extraordinary measures for the Fed, I guess not just the Fed here, but central banks around the globe.
Yes, but who knows when money printing runs out of control? And at the end, if you print too much, you end up in something like Venezuela.
You're not suggesting that happens anytime soon.
No, but I don't like the idea. And both parties, you get politicians say, what we learned is we can print all the money we want.
Right.
We don't have to raise taxes, we just print.
I hope you noticed Bill Gates flinch when Charlie said it just kept making the rich richer. And I hope you noticed that Charlie is just totally baffled, and he believes that our country is going the way of third world countries of the past, that we have no restraint and we have no conscious awareness of the price that we're going to have to pay in the future. His partner, Warren Buffett, added to it. And I want you to really pay attention to what Warren says.
Probably could not have conceived of a world as recently as 10 years ago. I would not have conceived of a world where you would have full employment, 5% budget deficits, with actually the probability of those rising from that level, and at the same time have the long bond at 3%. I would have said that couldn't happen. And then people now, you have this modern monetary theory, which there's no question you should borrow, any country should borrow money in its own currency. I mean, that is not like it's some great discovery or something that's been announced, but
No, but it can be overdone.
yeah, and that's the point. I mean, that hasn't solved anything. Just to say, well, it's much safer to borrow money in your own currency, but the convergence of these factors would have seemed impossible to me, and generally, if I feel something is impossible, it's going to change over time. I don't know in what way, but I don't think we can continue to have these variables in this relationship. Now, if we can, then stocks are ridiculously cheap.
I believe Warren is about 86 years old. He is recognized world over as one of the smartest people in the investment industry. And to paraphrase what I think he said was, if someone had said 10 years ago that this was going to happen, he would have said there is no way in hell that can happen. There is no way a democracy can function this way and expect to survive. Maybe I'm adding a little to it. But I think Warren sees the dangers we're heading into. And I think that's why he's got 24% of the market cap of Berkshire Hathaway in cash. Because he believes there's going to be a collapse, and it's going to be colossal, and it's going to be across the board. And he can go in and buy things, stocks, companies, because the bankruptcies, once this market collapse, interest rates will go up and corporate debt will be called, and all these zombie companies I've talked to you about will go away. They just won't be able to service their debt when interest rates go up, as they have to, as cash has to be paid for as opposed to giving away. So that's my take on the market. I thought I was a bozo for going to cash a month ago, but I think I'm in good company. I feel confident that these three people think like I think.